170 homes sold in June, more listings than we've had in 10 years, and prices barely budged from last month. What's actually going on in Sarnia-Lambton right now? Let's talk about it. Let's dig into another month of looking at the Sarnia-Lambton real estate market. Sean Ryan here from the Blue Coast team at CB Southwest Realty. And make sure you subscribe, and we'll have some great recaps at the end for you as well. So the big story this month is sales ticked up 4.9% versus June 2025. And that's a positive sign, but year to date, we're still down by about 9% versus last year. And the month was good. The year is soft though, and the market is in a genuine transition zone right now at 3.8 months of inventory, puts us just below a balanced market threshold. Technically still a seller's market, but barely, and listings are the highest in June level than we've seen in the last 10 years. So 350 new, 649 active, and buyers have the most choice they've had in years. So prices are softening modestly, but not collapsing. And that's the nuance really to nail when we're talking to people right now. And I want to look right now at pricing, and I want to lead with HPI, so the home price index, and why that matters. I'm going to explain to you every month. It's a newer indicator that we've been using in our industry instead of just the average price. And I'm going to tell you why. The average price gets distorted by what's sold this month. One $1.2 million lakefront home can move the needle by about 15K like that. The HPI tracks typical homes with fixed characteristics. It's like comparing apples to apples month after month. And it's the number economists use, and it's the number really you should be using as well. So I want to look at the June 2026 HPI benchmark, and the composite, the single family homes are 491,000. And that's down 1.2% from last month, but up 1.2% from 6 months ago, but down 3.9% from a year ago. Yes, I threw a whole bunch of percents at you there, but still down 5.9% versus 3 years ago. So we recovered that post-peak correction fully, but look at 6-month trend, up about 0.7% 3 months ago, and then up 1.2% from 6 months ago. The HPI is clearly slowly creeping up from its floor, which is great. Now let's look at home styles, the HPI of those. One-story bungalows, 354,500, still commanding a premium, but down 2.8% year over year. Two-story homes, 437,000, more affordable entry point, down 5.2% year over year. So now let's look at some averages and mediums for June. Average price, 548,000, down 4.3% versus June 2025. Now we got the medium, 490,000. That's down 3% versus June 2025. Average versus medium divergence, it's a 60,000 gap, $59,000 gap. Means some higher priced homes are pulling the average up, and the medium is really a cleaner read. So year-to-date average, 523,000. Year-to-date medium, 459,900. So a clear difference there. Let's look at sales activity though. I want to look monthly June 2026, 170 sales. So let's go back a few years here and look at a couple different stats. So versus June 2025, 4.9% gap. Great, positive. June 2024, we're up 15% from that. Strong versus 2 years ago. June 2023, pandemic time, we're down 7% compared to 3 years ago. Pandemic peak, we're down 10%, so significantly low. June 2019, we're down 8%, still below. But June 2026, we're still down 20%, so well below historic levels. And the historical bar chart context really is recovering from the 147 sale low in 2024. 2026 was 211. 2009 was 185. Today is 170, still below pandemic norms. But hopefully we never have pandemic norms again. But even looking back to 2026 and still being down significantly from then, that was really in the market, was a really good ramp up from about 2025. We start to see things tick out. We had a really good run on the market, and then things got a bit spicier once the pandemic happened in that market as well. So year-to-date sales right now, though, we are at 739 sales. We're down 9% versus 2025. And the flag is clearly, an important context here we want to think about is January, February were slow months nationally. May and June have showed improvement. The year may look weaker than current momentum suggests, but year-to-date tells a different story of where we've been, and monthly tells you where we are now. And then now let's look at some new listings and also the active inventory we have here in Sarnia-Lambton. New listings in June 2026, 350 new listings, up 0.6% versus June 2025. So virtually flat, not a whole lot of change, but up 31% from June 2024. So sellers came back to the market big last year and really have stayed. And the highest June listing count in the database going back 10 years. So I went back 10 years. And the next highest was in 2026 at 265. Also that same ramp up year like we were talking about earlier. Active listings, 649, nearly a 10-year high for June. Like we said, up only 0.3 from June 2025. So again, flat versus last year. Inventory surge has kind of plateaued maybe. And then buyers have choices right now. And this is a notable shift from 2021 and 2022. And sales to new listing ratio, 48.6%. And the balanced market range roughly is at 40 to 60. And we're right in the middle of a balanced market. Not a frenzy, not a fire sale. Overall, actually a really healthy, a really enjoyable market for most people. So months of inventory, let's look at the gauge of that. What story that's really telling us here in the Sarnia-Lambton market. You've heard me talk about months of inventory over and over again for the last months, but I'm going to break it down for everyone here again. So June 2026, we have 3.8 months of inventory. Technically a seller's market under that 4 months. Year to date, average 4.5 months, balanced to slightly buyer favorite on an annual basis. The rule under 4 is a seller's market, 4 to 6 is a balance, and over 6 is a buyer's market. So where we've been now in the last little bit is June 2021, we had 0.9 months, a complete seller frenzy. 2024, 4 months, balance. 2025, 4 months, balance. June 2026, 3.8 months. So edging more back towards that seller's market. And it really depends on the price range you're in. So the story, inventory is up, but so are sales. The market is actually tightening slightly, just slightly, versus this time as last year. So keep in mind, not all price ranges, not all categories are created equally. So why it might be 3.8 months as a whole market, some inventories only have 2 months, some have 12 months. Really depends on the price range. So don't take this as a blanket statement. These are just averages of what's going on with the market. Really talk to a professional. Talk to someone if you really want to understand your market, your segment, as they are all different here in Sarnia-Lambton. And let's look at market efficiency metrics. So sales to list price ratio, 97.5%. So sellers are getting 97.5% of every listed dollar. Very solid, up slightly from June 2025 at 97.3. Just little. Competition is actually ticking up compared to peak at 108 in June 2021. That was a frenzy, bidding wars everywhere. And in 2026, the market was 96.5. So today we're above that historic baseline, which is great. But keep in mind, this is their last list price ratio. So if the home went on the market and did a bunch of price adjustments, it's getting 96 or 97% of that last adjusted price. Or if it was on the market a few times, it came back on. So it's not a perfect metric, but it gives you a good sense of what the market is doing. Medium days on market, 25 days. So very healthy, very happy with that. Again, some are higher, some are lower, up 21 days from June 2025. So homes are sitting a bit longer, up from the pandemic low of 8 days. Dramatically different environment, obviously, and 25 days is still really reasonable pace. Like, considering that if a home goes to the market and gets an offer within the first 10 days, you usually have a week or 10 days of conditions to get through. So very, very healthy when you think about it that way. So most popular home styles, according to Sarnia-Lambton Association of Realtors, this is the stats on that. Coming in at number 1 is Bungalows, 70 sales, average price 601,000, the most popular by a wide margin and commanding a significant premium. Very normal here in Sarnia-Lambton. 2 stories, 32 sales, average 624,000. 1.5 stories, 15 sales, 329. Most affordable style right now, and very popular in the tree streets, those wartime houses. They're all very identical for the most part. Great homes for those first-time home buyers, and we're seeing a lot of landlords interested in those as well. Number 4 came in at Ray's Ranches at 12 sales at 620,000, and side splits, 3 levels, 8 sales, 499. So overall, very healthy in all of that. Key insights: bungalows dominate volume and carries a strong pricing. We know that, and the Sarnia-Lambton bungalow premium is very real, and it really always has been. And the 329,000 budget buyer friendly, which is great. Great places, a lot of great neighborhoods as well. So I want to look at now a bit more some neighborhood breakdowns for you in June. We're just looking at Sarnia-Lambton only areas for June average sale prices. Sarnia North was 518,000. And then we're looking at Point Edward, Lakeshore area was 892,000. And then Sarnia-Lambton in a whole was 17 sales of 561,000. And then Sarnia East, 469. And then if we're looking at Lambton, 529, Brights Grove, and then 489,000 in that area as well. So I'll put those all in the description there. I didn't want to go too much details on those, but check the description or the full blog post, and I'll have all those numbers breaking those areas down a bit more. So Sarnia North is the volume leader with 88 of the 150 sales in Sarnia-Lambton, where most buyers are shopping. It is what it is in that, but we're seeing more and more come to Central Sarnia, wanting to be walking distance to downtown, being more affordable. Point Edward, premium market, 892,000. Really runs hot and cold, Point Edward, so you never know what you're going to get. It takes a couple big sales. Like we talked about earlier, those average prices can be skewed. And then note, the average price is up significantly in the 12 months, average of 738K, like we talked about there as well. And you look at Brights Grove, land 2 sales, but still 67% sale ice price ratio is hard to be there. And then leads volume with 401 sales and has the highest 12-month average of 738,000. So pretty interesting there. Again, I'm going to put the breakdowns of all that into the description and into the blog for you as well. So price distribution, where buyers are shopping, 168 sales broken down into price buckets here for you. Okay, so this is all the different pricing categories in Sarnia-Lambton. I'm going to break them all down versus that. So under 200K, 0. It's even hard to find a lot for under that. I remember when I first started doing these market updates, we had a lot of homes under 200. If you go back and look at them, it was pretty cool to see. But 200 to 300, 7 sales, 300 to 400, 20, 400 to 500, 32. That's a sweet spot. 500 to 600 tied for 32. So another sweet spot. 600 to 730. You can see that really that 400 to 700 makes up most of the sales with 90 sales. 700 to 800, 8. And 800 to 900. Some premium properties there, 21 sales. And 900 to 1 million, 8 sales. So not a bad month for that. There's 4 sales for 1 million to 1.5, 1.5 to 2, 1 sale. And there was 5 sales at a 2 million plus price tag in Sarnia for June 2026. So that's not bad, actually, when you look at all of that. Now, let's look at some national stuff in the real estate market. What is maybe affecting us in Sarnia? What is trickling down to us here in Lambton County? Not a whole lot yet, but we're going to see. We have Bank of Canada, July 6th. They are doing their, June 10th. They held their overnight rate at 2.25%, the 5th consecutive hold. Prime rate's at 4.45. I don't think anyone was very shocked. Got mixed up with my dates. The next Bank of Canada decision is July 15th. Also, CREA drops its next quarterly forecast. So a good doubleheader for us in the real estate world that love our stats. Most likely Bank of Canada is going to hold their rates. I don't see them changing much. There's talk of them going up. They might go down. I bet you they hold. We'll see what happens. I don't think it's going to make too much of a difference. And the Bank of Canada's dilemma is weak economy. GDP nearly flat, soft job market versus inflation running at 2.8 to 3.2%, partly due to the Middle East energy prices, and markets are pricing in a 95% probability of another whole July 15th. Rate hike scenario is a small, but not zero, which is not surprising. So I want to look back at mortgage rates as of today, so July 6th, we're recording this. Best 5-year fixed insured is 4.04 to 4.09. Best 5-year variable is 3.25 to 3.45%. Variable is notable cheaper right now at a 60 to 70 basis point spread versus fixed. But the risk the rate hike late in 2026, early 2027 means fixed offers certainty, worth a conversation with your banker or your mortgage broker. Really depends on your risk tolerance, folks, if you're going to do fixed or if you're going to do variable. I do variable on my personal house, and I normally do fixed on my investments, but that's my personal preference. Everyone's different. Talk to a professional. There's so many different aspects you want to look at there. Key for buyers, insured mortgage cap is now 1.5 million raised. So that's great. It's going to help those buyers. Not really affecting Sarnia-Lambton. That's more of a Toronto GTA thing than here in Sarnia. And more buyers, well, they use more insured mortgages for higher price homes. But again, more of a Toronto thing. Probably London even too. Not really Sarnia. And then the CREA national forecast, April 16th, 2026. Most recent next update is July 15th. These are very interesting numbers, actually. So the national average price forecast of 1.5%, 688 in 2026. National sales, 475,000 transactions, 2026, up 1% from 25. Downgraded from plus 5.1 January. So like the national market is actually up overall, but Sarnia-Lambton is still down on their sales year to date. Why the downgrade? Mid-March oil shocks the Middle East conflict. Yeah, we keep hearing about this as well. Fixed rates go up. Buyers pause on tariffs specifically. Virtually flat price growth expected in 2026, 2027. Prices go up by about 1%. Sales up by about 2.1. So the market overall looks to be flat. Not going to see any drops, hopefully. Most likely not, by what most economists are saying. We're probably going to go up in the next year and a half by about 2%. So, every $100,000 is going to go up $2,000. So let's say that much price, 500,000. Probably going to go up by 10, 15 grand roughly. So really good, really healthy overall. So keep an eye on for that. So what are we seeing right now from like a buyer's read? Like if you're a buyer looking at the market, what's the read on it for a buyer right now? You have more inventory than you had in years. 649 active listings right now. The HPI is down 3.9% year over year. You're buying a better price than 12 months ago. 21 days on the market means you have time to be thoughtful. No more same day panics and bids, which is great. But 3.8 months of inventory means it's not a full buyer's market either. Good properties, they're still moving pretty quick. That $400,000 to $600,000 range is where the action is. Be prepared for competition at fair condition, well-priced homes in that band. Fixed versus variable is cheaper today, 3.25 to 3.45, but there is a rate hike. It's a real risk for late 2026. Talk to a mortgage broker before deciding. Insured mortgage cap is now 1.5. Great for first-time homebuyers. I could use that 5% down purchase. Again, not as much here in Sarnia, more London further over. And if you're waiting for rates to drop further, CREA says that may not, and the next move could be up. So, buyers, if you're trying to time the market, you can't not time the market. If you could, I don't know, you'd be somewhere different most likely. I always say buy when it's good for you. The market's going to go up and down like a roller coaster over a lifetime of that ownership. All I can tell you right now is rates are historically pretty good. And prices seem to be pretty good as well. I think if rates do go down much more, prices will go up. We don't see rates go down, prices go down at the same time. So keep that in mind for those people that may be trying to time the market. Biggest mistake you can do sometimes, unless you're timing the season because you have a really nice backyard. So now I want to give you the seller's outlook of what the market's doing right now. 97.5% list sale ratio. If you're priced right, you're getting close to asking price. You are competing with 649 other listings. presentation and pricing strategy matters more than they did in 2021, 2022. Average price is down 4.3% versus June 2025. Set expectations accordingly and don't price comps to 2022. If you're pricing comps for 2022, do not do that. You're going to be disappointed. HPI is at 491K. Is your starting benchmark. Adjust for your neighborhood and style and finishes and all the other great things. Bungalow owners, you're sitting on the most demand product type. Lean into what you are marketing, and point average lakeshore average price this month is up 892K versus 12 months of 738. So June was a strong month for those premium sales. The year-to-date softness down 9% sales volume. That means longer days on the market across the board. Factor that into your timeline. And buyers are out there. 170 people bought a house in June. Make sure your home is the one that they find. And if you're not getting those showings and you're seeing those sales and stuff like that, it's most likely how your home's either presented in the market position. But most time it's price, folks. It's price, not location. As location helps, it all comes down to the price as well. So we got Bank of Canada, July 15th. See what's going to happen. We got the CREA quarterly forecast report. Like I said, we have a double header of great real estate news and forecasts coming up in July. Most likely, the rate's going to hold. It'll be interesting to see what the HPI and the new benchmarks come out. So keep that in mind as well. So bottom line, Sarnia-Lambton in June 25, the market of legitimate opportunity for buyers with choice, with sellers who price it right. The chaos of the past years is over. The crash, some people predict, never came. And we're kind of in the middle right now. That's actually a pretty good place to be in business, if you ask me, for someone that's been doing this for 20 years. I actually really enjoy this market. Rate angle, July 15, like I said, is the next announcement for that. So if you're thinking of buying and selling, love to talk with you. Always talk to a professional. Do come in, look at buying a home and what all's included in with that. And if your agent's not sitting down with you, there is a problem if they're not going over the buying process with you. So I'm Sean Ryan from the Blue Coast team here at CB Southwest Realty. Put all my details below. Make sure you subscribe. And remember, put Sean on your line.